3, 2, 1, action. Okay, so guys, I'm going to be breaking down a GBPUSD trade, and that I missed again this week. It was very devastating and it was terrible, but everything was good. The analysis was correct. The direction was accurate. It's just the execution. By following my model, I didn't get an entry, and it's normal. These kind of things happen, right? So, without wasting time, let's get on with this video. So, GBPUSD has been quite right. Let me see, consolidating quite a lot for some time, and you can see it in this price fractal. But within this price fractal, if you still strain your eyes, you can still see that price is respecting a little bit of let's say fair value gap right here. Price reacted from this fair value gap, broke out this high, broke out and took out this high rather, and there's another fair value gap right here. So this fair value gap with an order block, these two candles, one other block, price reacted from it, and you expect that for price to continue this bullish trend, price has to take out these highs. But you can see that that is not the case. Price didn't take out this high. Price failed to take out this high. Hence, we expect that if price closes below this last low, this bullish candle, it becomes an order block. And this order block, we engineer price to go down. So we can see that price took out this order block, and let's mark it out OB, and we are going for these lows, right? You can see that we had equal lows right here, and price has taken them out. This is a fair value gap. We are within this fair value gap. We also have another fair value gap right here. It's an order block. We don't know whether price is going to react, but that is not the case. We are talking about Thursday. My trade was on Thursday once again. So let's put a marker on Thursday and let's see what happened. By the way, this is the daily chart, right? And if you look at EU, you would see an SMT. So price took out this high on GBPUSD. So SMT, if we go back and I show you on EU, this is Wednesday's highs and this is Monday's high. So Monday's high took out Wednesday's highs on GBPUSD, but on Euro USD, you can see this is Wednesday's highs and this is Monday's highs. Price failed to take out Wednesday's highs on with this Monday's candle. So that's an SMT divergence that shows weakness, and we are expecting price to continue going downward, right? So knowing that we had an SMT, this is Thursday, Wednesday, Tuesday, this Monday, price swept out this high. It also swept this candle's high this Friday, swept out Friday's high and closed within this range. That is, it closed within a range and we expect bearishness, right? Price also closed below this candle, closed with a body close above, below it, and everything here is just screaming bearish, right? This fair value gap has already failed, so you can take it off now. And knowing that, let's drop to the 1 hour time frame. So don't worry, we're gonna treat all these things one after the other, right? So this high was taken out on Monday, and this is Wednesday's highs like we're talking about. You can look under, you can see the day of the week. This Friday's high was then taken out on Monday, and price just broke structure to the downside, leaving this place as another block. You can see that price came back to this other block and still on Wednesday reacted from it and then broke structure once more. So we have a break of structure right here, a market structure shift. Now this, what I'm teaching you right here, is advanced price action. So you guys should leave a like, subscribe, right? Don't learn this. You don't do. I'm giving you source for free. This is something that took me years to see in the market. So leave a like and leave a comment as well. So along this fractal of price that broke structure, we have a range. We have a range high to a range low, right? So we have premium and we have discount. We sell in premium, we buy in discount. So if we are bearish, we expect price to get to premium where it is cheap, so we can sell, right? And if we sell at premium, we hold until discount. I didn't even know that price was going to do all this, right? My model says I should target TR and that was the target. So forget about all these whole extremities and everything. But anyways, you can see that price continued trickling back up, and then price goes to what? Premium on this day, Wednesday. My apologies to adjust this candle. On this day, Thursday. So this is Thursday, and price opened while here, and then we broke structure. So now let's go to the entry time frame. We are in our zone of entry, which is premium. From our daily time frame, we expect bearishness because of all those SMTs, the close below, this disrespect of the fair value gaps. So everything is pointing bearish. Now we are in the 15-minute time frame to look for our entry. Now, what is my entry criteria? It's something that I've always posted on my channel with my screenshots and everything. I usually enter on an OTE, but these days I'm starting to change my mind and entering on a fair value gap. So I noticed that now this red line you can see is an OTE, right? I take my Fibonacci, connect the top to this place, connect the bottom to this candle's low, and you can see that that is the OTE level. So I just extend it out and in case of anything. So now we traced back to this premium of this range. We're expecting to sell. This is the first break of structure. So price broke this low right here. And sometimes you can see that this is where the textbooks are right. People, you can see the trend. We are bearish, bullish rather. Low, higher low. Sorry, higher high, higher low, higher high, higher low, higher high, higher low, higher high, lower low, breaking below this low. This low went above, failed to close above this last high. So this is the highest high. You can see it's very close, almost an equal high, but it's actually a bit okay. Maybe it took it out a little, but that's not important. What is important is the fair value gap that we see right here. The presence of a fair value gap shows impulsiveness. It means that price quickly displaced lower. So price quickly displaced lower, took out these lows, and then this is where our bell starts tingling. But we wait for the Q zones. So the London Q zone is this brown box that you see here, and the New York Q zone is this blue one. So it might not be that clear to you, but I don't want it to be obstructing my view, so I just made it very, very light. Anyways, price will retrace back up, fades to close above this high, broke structure below here. This fair value gap held basically. So this fair value gap held, price reacted from it, and then we have broken structure to the downside. So now this fair value gap is not important to us anymore. What is important now is this fractal of price, right? These four candles, 1, 2, 3, 4, are one order block. This is one order block. Consecutive candles are one order block. Please write that down so you don't forget. And within this order block, you can see that there is a fair value gap. I'm going to draw that out as well. The chart is going to get messy, so make sure you follow me. This is a fair value gap. But my entry is usually on an OTE. So I placed my OTE above from this top to this bottom. And this was where my OTE said I should enter. So I put my entry here. Stop loss above these highs because I don't expect it to be taken out. This is London highs. And I targeted TR right there. So the TR almost coincided with these lows, right? So usually you just target this, the lowest hanging fruit, the most likely place that price can get to. So let's mark it as high liquidity. And usually you should be done with the market, right? I don't know what caused this price touch to the bottom, but usually when you take this kind of trades, you target that region and you are out. TR is a beautiful thing, but look at it. Price didn't tag me in. Why? Because there is another block here. There is a fair value gap here. We have two zones of resistance, right? Sorry, two zones of support pushing price to the downside. That is the real support and resistance, right? Not what they're teaching in your textbooks. And you can see that I missed this trade. If I had taken it on the other block, I'd have had an entry. If I placed my entry on this fair value gap, I'd have had an entry. But I didn't do that. I put it above on this OTE level. This is 71.6%, I think. Then the other one is 68.3%, but I usually use the 71 or something like that. But all in all, you can see that this trade was a beautiful trade. It was very thought out, it was well planned, but the execution didn't give me an entry. And this execution is according to my model. So this is not a loss. This is not something that should cause pain, right? This is just a missed trade. It happens, it's part of trading, it's normal, and it's going to happen to you. It's going to happen to me again. It's going to happen multiple times. We don't have any control over it. However, the next time I see that there's another block and there is a fair value gap and my OTE sitting far into premium, right, above the fair value gap or above the other block, depending on which is higher, I am going to place my entry on the fair value gap or the other block, right? I'm not going to be targeting the extremities like I did here because I'm not going to allow this kind of thing happen to me anymore. That is how we learn, that is how we modify, and that is how we adapt to the situations in trading. So you can see that this would have been a very beautiful TVR trade after this break of structure, and it would have happened, right, in how many minutes? Let's find out. It would have happened in 7 hours. 7 hours, 3%, right? 3 arrow is empty as 3%. So if you are risking, depending on how much you are risking, if you're risking 0.5% of your account, it would have given you 1.5%. If you're risking 1%, it would have given you 3%. And depending on your account size, that's enough to foot the bills. I'm not talking about $10 accounts or $100 accounts. I'm talking about profit accounts of $5,000 and above. So if you are risking 1% on the $5,000 profit account, that would have been $15. That would have been $150 in 7 hours. Many jobs can't boast of that. So this is a mystery, and it's just what it is. It's normal, and we're going to see in the next video. Hopefully it's going to be a winning trade, and we're going to smile over it and review them. But for now, just leave a like, comment, and subscribe to the channel, right? It helps the algorithm and forwards these videos to people who actually needs it, right? So it also helps me as well, though. I want to grow this YouTube channel to a very big channel, and you can help me. If you gain any value from this video, just do that. That's the least you can do. And thank you very much. So see you guys later. Bye.